Oh man, so is it time to get out of altcoins, particularly those listed as securities by the SEC's latest filings against Binance and Coinbase? The crypto market here is tumbling to the downside 2.7%, and it seems like the rallying cry of yesterday, the excitement that we're going to back Brian Armstrong, we're going to back Coinbase in their court case, is starting to dissipate. The reality of these lawsuits and the battle that the SEC are conducting against crypto is starting to sink in. I'm going to share with you the key levels in the charts. I'm also going to be talking about altcoins, particularly those listed by the SEC, and whether I'm going to be selling millions of these altcoins back into the market to let go. Now, one thing is definitely for sure, this event, this moment, this week, 2 days, Monday and Tuesday in crypto, has really reminded us that the only crypto we can trust at this moment is Bitcoin. And if you've been following my content for a while, I've continued to say that Bitcoin is a class above all the other altcoins. The way I used to say it was that all the other altcoins are simply like investing in VC funds, right? In small startups, and any one of them can go bust at any given time. And that is why we now need to take a look at our portfolios and really think deeply, because we already know that, for example, the US are filing for an order to freeze the assets on Binance.us. Right? So if you're holding assets on Binance.us, you need to be asking yourself, what are you waiting for? Right? Would you rather be safe than sorry? Why are you keeping all your funds? First and foremost, there are people messaging me saying, I've got my life savings in Binance.us. Well, you shouldn't. You should never have your life savings on any one given exchange. You should be out in cold storage. Of course, you have to keep some trading funds on exchanges, of which I would suggest you hugely diversify across 3, 4, maybe 5 different exchanges with your funds ready to buy the dip, and then you get it off into cold storage when you're ready. Right? So now the SEC is trying to freeze Binance's assets. They're saying they've been violative conduct for years, disregard of the laws of the United States, evasion of regulatory oversight, open questions about various assets. So they are asking them, and they'll be required to give up, CZ and Binance, possession, custody, and control over customer assets. They're asking them to create new wallets with new private keys, including new admin keys, and for the exchange to provide the SEC with a record of all new wallets with customer assets. This is what it's all about, guys. They're going to use this guise of protecting your funds to stop you from spending your own hard-earned money. And guess what? When you fight back against it, they're going to use your taxpayer money. Yes, your taxpayer money to fight Coinbase, to fight Binance in court. And that's the way this works, right? The US government yesterday issued debt to the extent of $47 billion in one day to replenish their books because they are broke, right? So they have issued debt of $47 billion. They cannot run their household, so to speak. Yet they want to tell you how you can or cannot buy a little bit of crypto, take a little bit of a risk to build your future, to build your financial wealth. You know what risk you're making. Are they just going to call all consumers thick? Is that what they're saying here? That consumers don't know how to build a portfolio, how to take care of their portfolio, how to diversify, right? Because you should only risk what you're willing to lose. Right? That is the prerequisite to getting into crypto and investing of any asset class. That's not to do with crypto specifically. So let's get into this, guys. We could be facing $80 billion of crypto market cap at risk, could be wiped off the crypto market space by these actions by the SEC. I've gone ahead and broken down the different coins mentioned in each of the lawsuits. So with Coinbase, you had Chiliz, you had Near Protocol, you had Flow, ICP, VGX, of course, Dash, Nexo. On Binance, you had Atom listed, which is obviously Cosmos, BNB, BUSD, the stablecoin, which they shut down, issued by Paxos, and Coty as well. And then the ones which came up in both of the filings, which are probably at double risk, right, because they're mentioned twice, are Solana, top 10, ADA, top 10, Matic, top 10 cryptocurrency, Filecoin, Sand, Mana, which is Decentraland, Algorand, which, funnily enough, we know that Gary Gensler is close friends with Sylvia McCarthy, has spoken about them many times as being a great blockchain, listed here as a security, and of course, Axie Infinity. So that is your market cap, $80 billion in current bear market cap, to potentially be at danger now of being listed as securities. And so if we hold these, of which some I hold, if I go through the list, Chiliz, I probably have like a tiny bit negligible, Near Protocol a little bit, no Flow, no ICP, no VGX, no Dash, no Nexo. If we look on the Binance side, Atom, I've got a small bit, nothing too major. BNB, again, a small bit. Luckily, I was diversifying out of those when I didn't want too many exchange tokens after the FTX collapse. BUSD has obviously gone to stablecoin. Koti, hold a little bit. I've made my feelings clear about Koti from a separate perspective, not from a security perspective, but from a fundamental perspective and the lack of progress. I shared an update video. I'll link that up for you guys, which I got absolutely lambasted on by the Koti community. And then coming into the chunkier one, Solana. Again, I made my feelings clear about Solana from a technical and a fundamental perspective. I've been disappointed with Solana, and I was disappointed with Solana before the whole FTX saga. The amount of downtime they were having, I made videos, I've documented my thoughts and feelings and research on it as and when I've gone through it. I didn't sell because I've got such a low cost basis. So I'm sitting here at just slightly below break even or just break even depending on the day. So again, for me, not desperate to sell, but not desperate to add any Solana. Cardano is one where I've got a decent chunk of Cardano. Again, something I'm going to need to think about. I'm definitely not adding to this currently, but I'm going to have to think about it, as is the case with Matic. Filecoin, no. Sandbox and Decentraland, again, no. Not too keen to jump into the metaverse place just yet, particularly given the uncertain environment we're in. Algorand, I've got a little bit of Algorand. Again, I've made my feelings clear about how disappointed I am with their lack of progress as well. And again, separate from it being security, they've just not figured out the marketing aspect. So these ones, when you look at this between Koti, Solana, and Algorand, these are the three that I kind of hold. But again, I was already not too fussed about them because they weren't doing that great. In terms of the ones which you would be disappointed with, where I am personally, is going to be these two, Cardano and Matic. These are two projects I would be happy to dollar cost average into, but I've got to ask myself the question now, what is the risk here? What is the risk if these altcoins here start falling into the root of XRP, where the token just grinds down slower and lower as they continue to fight whether they're a security or a commodity, and then you just end up having people who jump into the project who are speculating that they're going to win a court case, right? This is the risk now of crypto. Now, personally, am I going to be selling right now? No, I'm not going to panic. I'm going to let the dust settle. I'm going to see what happens over this next period of time. The first and foremost thing we have to do is Coinbase is heading the battle, right? So we do need to rally behind Coinbase. We need to rally behind Brian Armstrong to go and get us some clarity. And that's one thing we're definitely going to get. If you've not watched my reaction video from earlier today with Brian Armstrong speaking to CNBC, giving an interview, talking about the lawsuit that was filed by the SEC, he mentioned that. He goes, at least one thing is going to come from this, which is clarity. And that clarity is going to aid us in seeing whether all of these are securities or whether we should be worried. Now, there is a chance that Gary Gensler is just being a little bit let's call it experienced in what he's doing. Maybe what he's trying to do is list all of these and say, look, all of these are securities. And then during the negotiation phase in court, he can cut down to a few of the ones he likes. But the more overarching point, the more worrying point, is that Gary Gensler has a completely negative stance towards digital currencies. This is not a case of him trying to protect consumerism, right? If he was trying to protect the consumers, he didn't do so for FTX, he didn't do so for Voyager, he didn't do so for Celsius. And if he did really care about that, his argument should stay around the fact that, oh, look, we asked you to register Coinbase, but you didn't. Coinbase is saying there was no route to just come in and register. Why are you making it sound like there was a clear path which we skirted? And yet the SEC is saying that's exactly the case. You're skirting the rules. You're trying to play catch us if we can. That was Gary Gensler's words. And again, you can watch my reaction to the Gary Gensler interview. I'll link that up here as well. So that's the kind of environment we're sat in right now. We just got to sit and wait. I'm going to be a little bit patient. But one thing is for sure, you did see some strength in Bitcoin. And part of the strength you did see in Bitcoin initially here was you need to take a look at the total total three. So the total three is what metric I'm going to be using here. And what this is the total market cap of the whole crypto space. Take out Bitcoin and Ethereum. And the reason I want to take out Bitcoin and Ethereum is, of course, I want to see how much of that funds is moving to Bitcoin and Ethereum, because Bitcoin and Ethereum were not mentioned, right? They were not mentioned in the lawsuit. So Bitcoin and Ethereum have further confidence now that Bitcoin particularly is marked as a commodity. We've heard the CFTC say it's a commodity as well. And Ethereum is just not being mentioned. Gary Gensler is not saying, even though the CFTC is saying that Ethereum is a commodity. So now we sit here and go, okay, let's take a look at this. And if we take a look here over the last couple of daily candles, 2 days ago when Binance got their lawsuit, total 3, which is all the money in altcoins, dropped by 4.4%. So again, a lot of people panicked when they saw those tokens being listed. Then yesterday when the market was feeling a little bit positive, you saw it pump up by 1.4% because people were buying the dip and thinking, oh, we're out of this. But then look at today. 2.5%. So if you take that 4.4, take off the 1.4, you're sitting at about 3, minus another 2.5. You're talking about a 5.5% fall in total market cap on altcoins in just the last couple of days here. So we are seeing a significant, I would say, outflow away from altcoins and perhaps into Bitcoin, because Bitcoin for now is holding okay. But jumping into the Bitcoin chart, there are a few key levels we need to watch. You can see we're trying right now on the 4-hourly candles here to hold support desperately at this green line, right? We broke ourselves above it. We got rejected by 27.3. Now we're trying to hold this line at 26.6 to then hold a bit of a base, right? Because that would then give us our higher low. This is what Bitcoin wants to do. So we need to watch that out here on the charts. Can we manage to do that? But the more worrying thing, which I want to share with you, is this pattern here. If you look at our falling wedge, okay, let's take a look at this falling wedge. This is the structure we're in right now. And if you look within there carefully, every time we've had a nice move to the upside, we've failed to create higher highs, right? We've not managed to create higher highs. We've just stayed within the structure of this falling wedge. Lower highs, lower lows, bears are in control. And therefore, if you want to take the measured move of this potential move and you take this swing leg up here, you apply it to the point of breakout. By the way, if you want to learn all this stuff, ijaz.uk/TA, take advantage of our TA course. You can pay in monthly installments as well, and you get access to all the future lectures on TA. So any future TA lectures, any advanced metrics I'm going to be introducing will be on there for no extra cost to you guys. This move can start bringing you down here to 21,000, and really that's when you're looking at 20,000 support by this blue line where the move originally started before the falling wedge. So that's what we're looking at here in terms of a structure. And we are just forming weakness. We do have weakness. Yes, it was a nice move yesterday. It was a nice rallying cry by Brian Armstrong and the markets felt positive. It did feel good. But look at that, the weakness. We couldn't clear this resistance here, let alone come up towards the top of the channel with the green line. And now we're showing some weakness again. So if we're looking at it, with a sober mind, we can see we still have this cup and handle pattern forming. But for now, we've got to worry about this channel, which is in the handle of the cup and handle. Now, as long as we can keep this, the pattern stays alive. But if we lose this structure and break down from this blue channel, then the structure is written off. Okay. We also can take a look at the cup and handle pattern, which continues to be in play. Remember when a lot of people were saying, oh, this cup and handle pattern is no longer in play, it's invalidated. I came out and I said, guys, the way my cup and handle pattern is drawn, we're still in this. This is not invalidated. And you can see it was a retest of the neckline at the backside. So we had that retest, we moved to the downside again. And again, the bottom of this channel continues to be in play at around that 24,000 level. So the market is pretty antsy right now, very precarious position, both from a fundamental perspective and both from a technical perspective. I'm just sitting out. I'm just sitting out and make sure I'm protecting my funds. And that's the aim of the game right now. There are so many of you guys who are not taking care of your funds. If you're on Binance.us, why? If you have your whole life savings on a crypto exchange, why? Why is it not on cold storage? Why have you not figured that out? Why have you not figured out how to diversify across different exchanges? No exchange is safe. Not the biggest in the world, not the second biggest in the world, and definitely not the 10th biggest in the world. We just use them to get our crypto, to get it off the exchange. Anything we need to trade with, fine, we leave it on exchange while we're trading, but use 3 or 4 different exchanges. So that way, if one collapses, you don't lose all your trading funds immediately, right? It's part of the risk we take when investing in cryptocurrency. And we all understand that. The whole reason we want to be in cryptocurrency is because we get the crazy returns. But at the same time, you've got to take the risk that comes with it as well. Hopefully you guys enjoy these updates. If you appreciate these updates, regardless of the time of the day, smash up likes. Don't forget to subscribe. Watch my reaction to Brian Armstrong here, and I'll see you in the next one.